Hi everyone, I'm Sasha Mirchandani, co-founder of Kae Capital.
Sasha, welcome to the Founder Thesis podcast. My first question to you, and you are one of the pioneers of this industry, so that's why I want to get your definition of what exactly is a VC or a venture capitalist. And you've been a VC for 2 decades plus now, so just help me understand what is a venture capitalist.
That's a good question. No one's really asked me that question before. And I think when I started my career, even I didn't know what a VC was. Uh, the intent was to just, help entrepreneurs do what they have to do without capital. My father had been an entrepreneur, is an entrepreneur, and he didn't have access to capital. So when I started actually, and I'll go into that a little later in the show, I'm sure, the intent was so different, but it actually turned out to be venture capital. But basically, we're just capital allocators to awesome people who build great things and stay on the sidelines, but take a lot of credit, which is not deserved. So that's what venture capital is.
Hmm. I've interviewed a bunch of VCs in the past, and I generally see a pattern that either a VC sees himself as a wealth manager, or a VC sees himself as a builder, co-builder of startups. What do you see yourself as?
I see it neither. We, of course, in a way, wealth managers because in the past I did it with my money, now I have other people's money. So technically that fits. But our goal is to be in the latter block and see how we can help. And not try to be the people who say that we are going to be the ones who decide for you. But what help does the entrepreneur need? It could be as simple as just emotional support over a conversation over a coffee, where there's no help given in that 1 hour conversation. But even that is priceless for the entrepreneur at that point when he or she is going through a downtime. And it could be opening up a very, very important door for a Fortune 500 company, like I was doing this morning for one entrepreneur, which is already a very large business. So it really depends. But we want to get into the trenches to help when we can, especially when times are tough.
Hmm. I want to understand a bit more on the wealth management side. Then I'll come to the building startup, co-building startup side. Um, as an asset class, you know why should a wealthy individual put money into this asset class of investing in startups? How does it compare as compared to, say, equity investment, or whatever other investment options are there? In general, like, what's your pitch to somebody from whom you are raising money for the fund?
Yeah, that's a very fair question. It has lots of cons, right? Long, especially funds like ours, long duration, 10 years plus, sometimes 12, sometimes 15 years. Uh, and it's illiquid, of course, because of that reason. And opaque because we take the money and say, trust us and trust us for 15 years or at least 10 years. So most people, no matter how rich they may be, they're like, hold on, what's going on here?
Yeah,
Uh,
there's no NAV.
there's no NAV, there's nothing. There's NAV, but it's on paper NAV. There's
Okay.
small distributions here and there coming out. So from all angles, it looks like a very uninteresting asset class, even though on one side it's very sexy. So the pitch is, look, this is the only asset class where you can actually one you can actually have an exit which is so huge that it moves the needle to such an extent that there's no returns you can get better than this asset class. Now, whether it be in fund after fund that we do, whether it be one fund we do, we don't know the answer to that. But that's the idea saying, hey, hold on, the next Google can come out of a K Capital 4 fund and you have a look and you can have a 12x fund suddenly. And some of our funds actually have done that well, where we're like, wow, this is way better than the market, substantially better. In fact, most of the funds have. But it's also a lot of luck, of course. We take credit at the end of the journey and say, we're great. But the reality is that it is an asset class that can make you the best returns you can imagine. But 90%, there's a huge big but, 90% of venture capital funds underperform. So you're really betting on those
Wow.
10% of VC firms that actually
Mm,
make the returns I'm talking about. And we were
mm,
telling them that, look, trust us that we are trying our best to be in that 10%. Globally, I mean. So it's a really crappy asset class with 90% underperforming, long gestation, opaque information, etc. So what we have done is we have really been transparent with the LPs. We have the best reporting. We have the most frequent reporting. I had an LP recently tell us that he's invested in 14 funds. Now, about 14K was the only fund which gave him quarterly, or if not, every 4 months we do a Zoom call with our LPs across all our funds. So he said, that's amazing that you all just update us, good, bad, ugly, because every 4 months you can't keep having good news, right? There could be many quarters or whatever periods when we have an update and not that great, but we speak about it and people appreciate it. So our transparency is very good. We believe there's nothing to hide. People are giving us their hard-earned money, whether it be institutions, whether it be individuals, whoever, and they need to know what's going on. And of course, the learnings, right? As an LP into a fund, you're getting access to the basement of some of the most interesting companies that hopefully come out of that particular fund. So if you want to learn something about the new age, about tech, about consumer, anything, that LP has access to some of the most. Like last time we had a big event with Google. Some of our LP showed up to the event in Mumbai. They had access to these amazing entrepreneurs who have built companies like Foxtail, Triya, Snapmate, GobbleCube. They were on the panel last night, some of our portfolio funds, companies across funds. And they were all waiting till 9 o'clock at night last night, just spending 5 or 10 minutes with these entrepreneurs. And these guys themselves have built huge companies. But
Hmm.
here they had access. So that itself was priceless for each of them.
Okay, interesting. It's not just a wealth management pitch. It has these perks attached to it, because of which people are more tolerant of the risk profile. Essentially, it's a high risk profile asset, because you said only 10% of
Yeah, we tell
this
people
is.
you have to put a very small amount of your net worth in
Hmm,
asset class like venture capital, right? Very, very small
hmm,
amount. So it
hmm,
logically have to be a very wealthy individual or obviously an institution which is geared towards, investing in venture capital funds. We don't want
hmm.
people who are putting a large chunk of their disposable savings or net worths in this, because that's when stress starts building for that individual, because they suddenly realize they need the money back and we can't give it back in year 5 or 6.
Hmm.
So,
Uh,
and it's not fair to take money from such people.
hmm. In equity, they say the average return is over a long term is 14%. Is there a similar number in venture capital?
We try to do 20% net at the end of our funds. That's the goal. Because that's what Indian investors want, is they want net at least 20, they think at least IPO, sorry, public markets with Tamil Rai or gold or whatever asset class they want to do. So our goal is beat 20. It's very interesting. If we look at our global investors, they look at TBPI and MOIC. They of course look at net IRR as well. They look at DPI, of course, but they're more focused towards the X. In India, the X is great, but they rather have the net IRR. So it's to balance global investors and Indian investors in one fund is quite interesting and challenging.
Can you break down some of these terms you used? I'm sure most of my listeners wouldn't understand MOIC, DPP.
I don't bore. I'll bore. It's very easy. These are terms that
Hmm,
anyone can research.
hmm,
Basically, it's the X on the fund. So you do X dollars and how many dollars you make. And
hmm.
then the IRR, of course, everyone understands what an IRR is over a 10-year period. So the goal is, can we marry both? And obviously we want to have high MOICs and DVPIs, but you also want to
What
make
is
sure that
MOIC?
the no. So basically, what we want to really do is marry the two together so that everyone is happy out here. Now, even in my initial funds, we had a lot of global investors. So we were focused on IRR, but not so much so. As we got more Indian investors, we realized that we have to be the Indian market. So now what we do is we have even shown one investor where they're a large asset management company in India. They have their own mutual funds. So we showed them that our funds are outperforming the mutual funds on that day.
Hmm,
So that
hmm,
really helped. So they're like,
hmm,
okay, you says your fund is done. I don't know the answer. Okay, bad. I said, sir, you guys have mutual funds started around the same period. This is what we did. Your same dollar could have gone to yourself, or you
hmm,
gave it to us. Say you give us $1 million. Now you tell us, and they're like, oh wow, this is actually outperformed. We'll give you
hmm,
money in the next one too.
hmm. Okay, okay,
All
okay.
these numbers are great. It all depends on the founders, right? But
Hmm, hmm,
this
hmm,
is what
hmm.
it is.
Okay. Uh, what's the hardest thing about raising money as a venture capitalist when you have to go and raise money? I know you started with your own capital, but today, what is the percentage of outside capital versus your own capital?
Yeah, I started my own capital with just initial checks between 2001 and 10. But after that, every dollar was raised from outside, except for obviously my own contribution to the fund. The hardest thing is that this asset class, when we started, it was very new. So it was very hard to convince anyone, especially in India. And therefore, all our money came from abroad, and I can talk about that time permitting on the show. And therefore, just selling them on the asset class. But even now, there's the same concern that I've talked about a few minutes back about being long gestation. Venture by its tenure is not going to be a 3 year journey, right? And therefore, that's where people think in their heads, God, we really have to trust this fund manager and his partners or her partners and give them money for such a long period of time. And that's the hardest part, in my opinion.
Okay. Um, is it harder to raise funds or to deploy funds, which is like to invest in
Race for
startups?
sure. Deploy is the
Yeah.
easiest thing in the world. We could deploy by this afternoon 50% of the fund because there's such great deals coming to us all the time. At least we think they
Okay.
are. So
Hmm,
it's very tempting. So we are
hmm,
actually we are very prudent and slow as a seed fund in the
hmm.
sense we do 5 to 7 deals a year at best, versus some of our peers doing far more. And they have their own strategy, we have our own strategy. For us, we're in no rush. Our funds
Hmm.
we take minimum 4 years to deploy, versus
Okay.
the industry average is 2 years.
Hmm, hmm. Uh, there are some of these strategies. So there is a fund strategy or a portfolio strategy, and there is an investment thesis. What's the difference between these, and how have you structured K? If you can just help me understand that.
You mean from themes and that kind of stuff?
Yeah. Also, in terms of the construction of the portfolio, what stage you invest in, how much you
Yeah, yeah,
invest in every startup, what percentage goes in a single deal,
correct.
stuff like that. Like,
So we like to model for actually 25 investments per fund. In the first fund, we hadn't really thought it through as much as we should have. So we didn't really balance the first check and the second check, which is a very important element of our business because nobody knows where the winner is going to come from, or at least a path to a company looking like a winner. So earlier we do maybe 55% of the original money was going into those 25 investments, and the rest would be for follow on. But as we've grown as a fund and reached now four soon, we like to do maybe 40 or 45% of the overall capital into the first check and the remaining capital for winners, because that's how we know that okay, this company is now reached Series B, it's getting to PMF, it's getting to be a real business. Now we can double down on the winners because capital allocation is what the LPs are looking for. Is are they putting disproportionate money into the winners and not just spreading it across 25 companies? The second thing we did was we learned is about something called recycle, and which is very very important in our business. Surprisingly, some funds still don't do it, which is in a particular period of time. If you make some exits, let's say in the first 5 years, or a certain percentage of the fund, can you return that the principal amount you keep and the profit you give back to LPs? When I say I keep the principal amount, we use that to make fresh investments in the fund. So let's say I just said 25 investments, but we can then suddenly say you have five more exits in that 5 year period. So we can use five more bets, as we say, shots in goal. So like all our funds so far we'll end up with 30 investments, 30, 31, because 25 from the core 40%, originally 50, and the rest comes from this recycle, which is critical. And let's say the criticality of recycle is so important. Our 29 investment in K1 was Porter, which has become our most valuable business in K1 right now. So if we didn't have the recycle clause, there would be no Porter. And that small exit that we had made in some company XYZ would have been meaningless because we divide that over, let's say, 30 LPs. They won't have even known they got the money in the account versus now a $1.2 billion business.
okay. Uh, so recycle is a way of increasing the surface area, like how many bets you can take. And
Correct, because you got $100 million and you're gonna say spend 80 and 20 goes to fees, or you got 90 and 10 goes to fees. As much as the 100 that you raise, if you can put back in the system, you have a chance of even more success in the venture capital in the venture capital.
okay, okay. How does the company, the VC fund, make money? Like there would be multiple elements. Like you would possibly there would be a profit share, which would be a
Yeah,
bigger
that's the
element, but
standard
also
for all
your
VC firms.
regular running costs. Like how do you meet the salary costs and
No, it's
rent
it's the
and all?
same 220 model. We've had in the original funds were much smaller, so we had 3 and 30 because the fund was very small. So if you have a much smaller fund, you need to have more percentage. As the funds became bigger, we moved to two. We still have 20% profits, but if we have a certain threshold of profitability, if we hit, let's say we hit 4x returns, then we go to 30% profits. So our LPs have been kind enough to give us more, but we have to hit those thresholds. So the 2% pays our bills, which is small. And our goal, Akshay, is we keep our funds small because of a variety of reasons. And I can go into detail why. But when you have a small fund, you're never going to become wealthy with the fees. Unlike in a bigger fund or let's say in private equity, you can actually make millions of dollars of salary. So God forbid the funds don't do well, it doesn't matter. You still make more money than any normal salary job, even at the CEO level, uh, as a even as a mid-level fund manager. But in our case, we could have spent 10 years and had very average and small salaries. So therefore, we have to make sure that the fund hits carry so that obviously the LPs make money first, but then we get our 20 or maybe even 30% to make it worth our time to have spent 10, 12 years of our lives per fund to make, hopefully, then we become wealthy as we call it. Conventionally, everything is different.
Hmm. Okay, okay, understood. That 2% every year is like management fees for managing the assets,
That's
the
right.
AUM,
That's right. That's right.
which helps you run. But you want to be aligned with your LPs, so the bigger portion of the pie needs to be the carry or the profit share.
That's right.
Uh,
And we keep our funds small, so LPs know that we're not really making that much money in our lives with the 2%, and therefore they
hmm,
know we're hungry. It's like an entrepreneur, right? In most entrepreneurs, would only make money when they sell their businesses. Maybe they'll have small exits here and there, but that's meaningless. So even if they have 200 million of stock in company XYZ, it's meaningless till they do that IPO or let alone IPO sell. By which time, no one's going to grudge the entrepreneur because he or she's made a lot of money for many shareholders, from funds to public market investors, and think, okay, why can't he or she sell some stock
hmm,
now?
hmm. So, do smaller VCs outperform bigger VCs? Because there is that skin in the game. For a smaller VC fund, there is more skin in the game. Whereas, as you said, with a big
Yeah,
fund,
I think yeah, the answer is yes. For a variety of surprisingly, they do. Right? And that's a simple insight I learned from my previous job when I worked in Nokia Corp slash Blue Run Ventures, and I took that to when we started K Capital, and that's why we, if you notice, we've been small, 25, 50, 100, even K4, which we will launch at the end of this year, early next year. Our goal is not more than 90 or $100 million. So people just keep getting bigger, but like I said, there's clear data that 90% of funds underperform, and then 90% of funds over a certain size underperform. So you're just mathematically going deeper and deeper into a hole. And
hmm,
therefore, we're like, hold on, if we just keep our funds small, as you rightly said, keep ourselves hungry. And on top of that, there's a correlation to success when the fund is smaller. Because if you see you want to do a $400 million fund and you want to do maybe three times net after fees, you have to generate more than $1.2 billion. That means you need X holding in some of your best companies, which is easier said than done. Right? You do the math. And therefore, we're like, hold on. If we know that the chance of success at that stage is so much harder, why would we waste 12 years of our lives? Paradoxically, it's easier to raise a 200 or $300 million fund than a 100 million fund because institutional investors can give you a 20, $30 million check for a bigger fund. So we've really been uh, stuck there. We're like, we don't want to raise the bigger funds because of the returns. But that's how it's interesting how paradoxical it is.
so what you're saying is that if you're raising big money, then you have institutional investors and they are easier. Or if you're doing a micro VC fund of say 100 crore, 50 crore, something like that, is also easier. But the
No,
middle,
yeah, the middle is harder, correct? Because it's easier to raise a 200 plus all the way to $1 billion, whatever size you want to go after. Because if your returns are good enough and your story is good enough, there's enough money, institutional money around in the world. But they don't waste their time and give $5 and $10 million checks. Ideally, they want to give 15, 20, 30 million. So for that, mathematically, they need, from a safety point of view, they don't want to be too big of an investor in your fund. Neither do you want one investor to be putting so much capital. So from both sides, it doesn't work. And therefore, they're like, hold on, we like your returns, we like your background, we like the track record, do a bigger fund. And so it's very tempting. But then I know that the probability of our success goes down by X percentage. So I'm
hmm,
like, hold on, is it worth doing a harder fundraise and getting a hopefully a better output at the end of those 10 years? Or let's do this quicker and hope we still do well enough. So far we've been on the fence of no. Let's do a harder fundraise because we'll get smaller ticket, 1 million, 2 million, 5 million, half a million. But that's okay because eventually we will hopefully do better than the bigger fund.
hmm. Uh, how do you raise money? Does it happen through networks or cold emails? I'm sure cold emails may not
No,
necessarily
cold
be
cold
working,
never
but
works.
how does
Like we tell
yeah?
entrepreneurs, don't do cold. because that's never
Hmm.
going to work because we don't know who you are. Come through a reference. So we definitely go through references in most cases. Most of the time, we've done it through contacts that I've had around the world, relationships I've had, etc. And sporadically, we've used good partners, as we call them, distributors, in locations where we have no access. So that's what we've done. Our last fund was maybe 10% was distributors and 90% was through our contacts. The next fund, who knows? We'll see. If you want to go to a new
And
geography, for example, it makes sense to tie up with a partner who could take us to those markets.
so a partner would be like an investment banker who would have
No, it'll be like
connections.
these distributors. They're these specialized
Okay.
distributors.
Okay.
In India, you go to a wealth management firm.
Hmm.
Globally, you have actually certified distributors because they go through a whole test to make sure that they're certified to get, because money is exchanging hands, so it's taken
Hmm.
seriously in the US markets. You have to go through a lot of compliance, and then they
Hmm.
get the accreditation. And therefore, once you clear that, these are people who know, let's say, universities, endowments, fund of funds,
Hmm.
etc. around the world.
Okay. And what is the country-wise split of the funds that you have raised? Like which countries contribute majorly?
Well, actually, it's all over the world. Good question. Again, no one asked me this question. We have from the US, UK, we have money from Israel, we have money from the Middle East, where else? South Africa. Obviously, India a lot. In the last
Hmm.
5-10 years, India has really taken off as an asset class. People are willing to put money, even though I explained there is, in some cases, grudgingly because of the tenure. But people have understood the value of this. So it's a good mix across. India is now, I'd say, almost 50%. So
Wow.
there's
Okay.
that much demand in
Hmm.
India now.
Hmm. Okay. Okay. Yeah, I think it's a more accepted asset class, and like startups are not that much of a stigma now. uh,
And what's happening is families getting richer, and the younger generation wants to invest in this asset class. The older generation are like, maybe they don't understand this. Rightfully so, they've done their bit. The younger folks understand it. They want to be closer to the startup ecosystem, and getting into a fund makes a lot of sense for many of them.
mm, okay. 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 Now, coming to the investment side of it, how do you do you have like a selection criteria, like a set of check boxes, or like how do you decide which companies to back out of the, and what's the typical ratio, like how many deals do you see versus how many do you back?
Well, we get thousands of deals. In fact, one of my partners on this call, they tell you exactly how many we get. We mind that very carefully. I don't remember the numbers, but there are thousands of them that come. Most of them are rejected. Maybe rejected is an unfair word, but most of them we give a polite no to on by email itself. But we answer every single email, or at least try our very best. Then a bunch of them come into a conversation at least with one person in our team, whether it be a analyst, associate, a VP, a partner, whoever, it doesn't matter. And then there's something called that goes into a D2, where it's a D2 level of diligence, where maybe the call goes from one person to the second, or it's killed in the first. But at least it's something there to have that first conversation. Maybe it's a referral by someone like you, like a friend like you, say, Akshay, Sasha, have a look. I'm like, okay, if Akshay is recommending it, definitely someone should speak to them. And then, of course, there's something called D3, which is deep due diligence, where the partner and a team that he or she gets along, two, three people in K, senior people, get together and do a lot of diligence. Then they create an entire IC memo that gets presented to the entire partnership. That's obviously a much smaller fraction of the deals that eventually come. And then from there, like I said, we do about 5 or 7 deals a year.
Okay. This The third level of due diligence is like what is it? Is it like financial due diligence or?
No, this see like last time I was dinner with these entrepreneurs that we funded, right? So someone asked when did K invest? So I was just asking them, I didn't remember. So I think one was 3 months into existence, one was literally 4 months, one was just a concept, just leaving his company. So you can see the answer. There's no financial diligence. It's more about a bunch of things we keep thinking of as to what we need to look at in an investment. Uh, whether it be TAM, why now? The why now question is very important. Timing is critically important. So obviously the contours of the team are critical. For us, we are a very founder focused fund. Obviously, like I said, we'll have some themes in mind that say partner XYZ. So if they can marry that theme and say, okay, we believe that this theme for this reason is taking off, and we like Akshay, let's say podcasting, and we like Akshay and his team and for this reason. So there are many such things. And we're constantly upgrading that document. Literally for the last 20 years, we think of new things and say, okay, add this point. Let's say a simple thing like conscientious. A conscientious person is a person who's very successful. So we put that in and we ask questions around people, why is he or she conscientious or not conscientious? And this is what we define it as. So these small things make a much more of a difference for us than the financials, where there is no financials. Talk about grit. Why is he or she so determined? What gives him or her the right to say that someone references saying that Akshay has all this amazing grit that even when times are going to be very hard, he or she is going to be at it. So that comes from your past, and that's what we're checking on.
Hmm. Okay, fascinating. What are the themes that you're currently bullish on? That why now? So, what is it that is now relevant?
Well, we have looked at multiple themes. For example, in 2012, we spotted mobile and we did cloud native companies. In 2006, we did InMobi, which was mobile first, right? And it became first premise was mobile in India. We realized it's too early, and then Naveen and his partners moved fast enough and moved to global, but mobile theme global. That's what become India's largest ad network. In fact, global business. Then in 2011, we saw that the enterprise SaaS was taking off from India, so we did a couple of investments like Certa, etc., which done really well for us. Then the Indian customer is like a digital first, so we're looking at that right now. AI now has become an infrastructure layer, so that's become very interesting. And when we stay focused on themes, sectors, we don't care who it is. So if the theme is matching, and then the founder is, again, like I said, we're founder focused, and the sector, who cares? If the theme matches the entrepreneur, then we marry the two together. We let the founder lead the way. That's why we are, let's say, a sector agnostic fund.
Hmm. Okay. How do you evaluate founders? And maybe you can do some case studies. Give me examples of founders you backed. What got you excited about those founders?
Well, like I was saying earlier, there's a whole variety of things we look at, but it's more about the personality of the founder. Sometimes we like to see, uh, is the team really complementing each other? So, like, okay, Akshay brings X to the table, Vineet brings Y to the table, and John brings X to the table. And so, if they can actually complement each other instead of kind of duplicating what they're doing, that's wonderful. Have they worked together in the past? What happens otherwise, life, you and me, are like, we're bullshitting each other right now. But if we had worked together, then we know, okay, Sasha's good at this, don't let him waste time on X, Y, Z, and Akshay's good at this. Hit the
Hmm.
ground running, right?
Right.
If they have worked, for example, in let's say a multinational firm and a startup which has grown, so they've seen both sides processes, then they've seen the startups and said, okay, this is what worked in the startup where it took off, and the entrepreneur did this right, but he also did this wrong, or she did this wrong. Let's marry that together, and we know each other. And we've seen entrepreneurs between the age of 32 to 35, if they can have two, three co-founders together, it becomes very, very interesting. But
Hmm.
obviously, we funded entrepreneurs who are 55 and we funded entrepreneurs who are 21 or 19. And
Hmm.
it hasn't
Hmm.
really mattered because
Hmm.
sometimes if the founder is naive, he or
Hmm.
she doesn't realize how hard it is. Those actually work out because you just jump in and don't realize how tough it is. Then you realize, oh my
Hmm.
God. But because they're already in, they say, let me
Hmm.
just figure this out.
Hmm.
Versus a more seasoned person may not even jump in. So we
Hmm.
like to marry all these things. The nice, well baked team, touch wood. Then you got the
Hmm.
20-year-old crazy entrepreneur who built something out of the blue and everyone's stunned as to how he or she did it.
Hmm.
So different strokes for different folks.
Hmm. Uh, do you typically also back single founders? Like you've
Again, see
spoken a lot
everything.
about team.
We
Yeah.
keep insisting on single, well baked teams.
Yeah.
But eventually, actually, what happens is that there will be a founder who breaks that logjam, where he or she clearly comes out as someone who is a rock star, and then it doesn't matter. So again, last night when we had the event, we were chatting with one of the founders we backed, which is Romita, who's a company called Foxtail,
Foxtail. Right.
right?
And she's a
And
solo
that
founder.
time, solo founder. And I
Hmm.
remember my partner Gaurav calling me up and saying, Sasha, Romita has reached out, and we were actually debating whether to even slow down on consumer at that point because we were so busy with so many other sectors. And I
Hmm.
said, so what's your point? He said, Sasha, she really would love to partner with Kay and I find her to be awesome. So I started laughing and I said, okay, I'll be happy to do the call then. And she said, and she had liked Gaurav from day one and followed what he does and so on and so forth. And by then, another partner was Sunita was joining. So I said, Sunita, you better take the decision here. me and Gaurav liked the founder, you decide. So she did the call and she liked her too. And we broke the rules, right? We were not going to go to consumer. We did a consumer company. We're not going to do
Okay.
single founder. And you can see how well
Yeah.
the company is done. So,
Yeah.
all this bullshit that I'm spouting right now is thrown out the window if the right person walks in the door and it's
Right.
fresh in my
Okay.
mind from last night.
Okay. Very interesting. Uh, I guess you must have developed a very keen sense of judging people by now, because that's what you're putting your money on, that sense of judgment only.
Yeah, I hope so. I mean, we still make many mistakes, but our business is about getting a few right. So
Hmm.
that's what we think we are reasonably good at, and
Hmm.
that's what we really focus on. But
Hmm.
being a institutional fund, we like to do everything properly: the diligence, the theme, the timing, all that stuff. We take it very seriously. But eventually, it comes down to after doing all that, is judging the person.
Hmm.
And the minute as VCs, our egos take over and we can fall in love with the theme and we say, oh, has to take off. And actually, that's probably right. That all roads are leading to this particular, let's say, theme moving in the right direction to take off. But if the entrepreneur cannot execute, what is the point? And like I
Hmm.
said in the beginning, we're not going to do it. We're not capable of doing it. That's why we're giving the money to somebody else. So we have
Hmm.
to be very careful that okay, this is all making sense, but can Kapil really go out and execute this, or can Sunil execute this? And if not,
Hmm.
best that we back off
Hmm.
and not try to be too smart here. And when
Hmm.
we've not backed off, we've lost our shirts.
Okay. Uh, for a lot of VCs, I've heard them say that the biggest thing that matters to them is the TAM. Uh, like, if the TAM is not big, then it doesn't matter how good the founder is, etc., etc. So, what is your take on this?
We made many mistakes here, unfortunately, and we're trying to correct that. Is on paper that makes a lot of sense, right? Because we go after very large businesses, and even when we do our internal memos, TAM is a very big part of our discussion. But what we've learned is if the TAM is already very big, then you already have lots of incumbents there. On the other hand, if you have a fast growing niche area which is growing really fast, but we know that this founder is capable of jumping from one to the other, and there's a new trend that he or she has caught, it's better
Hmm.
to go after that founder because there's less competition. He or she has gone to a new idea and cracked it, and it's growing like a weed because suddenly everyone's like, wow, this is what we really need. Go here. And so we'd rather go to that kind of category where it's a small niche at that point, looks small, but
Hmm.
actually is ready to take off and actually growing faster than the incubator market.
Hmm.
When we do
Uh,
that, it works out very well.
hmm. Okay. Uh, is in general, I'm not specifically asking for you, but in general, is the VC world very trend driven? Like,
Yeah, it is.
are there like
The,
hype cycles? Like, maybe there's an AI hype cycle right now, and
yeah, throughout my career for 20 years, 25 years. I mean, I've lost track of the hype cycles, the waves as we call it, right? The constant waves, and we have to answer these questions. Like you asked me, what are your themes, and we have because we can't be sleeping in a cave. But it was actually very dangerous because what happens is when you fall into those trends, then you all of us are in the same bucket together and competing in the red ocean because these 10 entrepreneurs come and 5, 10 funds all competing to get a slice of the pie. So sometimes you can do a little bit of soul searching and say, how can I be really contradict all this and step away and see what else is going on in the rest of the world. And that's how if and when we've done that, we've found amazing companies that no one is looking at and really partnered with amazing success stories over there. But they're just completely away from the trend.
hmm. What are trends which you felt were worth ignoring? Trends which you saw in the
I
past?
thought the one I can remember the earliest is that 21, 22 when crypto had gone mad.
Hmm.
Every second company was 50 million for a startup. The
Hmm.
same entrepreneur was doing something else 10 days back. They realized see, entrepreneurs are smart. That's why they're entrepreneurs. They're super smart. We have to respect. I'm in this business because of every one of them. That okay, these buddy VCs, they're going for the trend, let's get into crypto. Now that doesn't mean that good crypto companies will not come out, but very few have. But every second company, I'm like, hey, I remember seeing this guy just like a few weeks back doing some SaaS company. But now they already come up with a new crypto idea and it's now getting valued at 40 million for pre-money. And they've got three term sheets from top tier VC firms and they say, okay, take it or leave it, do it by tomorrow, tell us, don't waste our time. And we have to take a 24-hour decision. And I'm like, boss, something's not adding up here. I think best that we're not smart enough, which we honestly were not. We just backed off. And thank God we backed off.
Mm.
You know,
What about EdTech? Post lockdown, there was that whole EdTech trend. Everyone backing EdTech businesses. Was that overhyped, or do you think that it was it was a good opportunity?
you mean in that 22-21 vintage when the market is very
Yes,
hot?
yes, 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 yes,
Yeah,
yes.
so we got sucked into that. We did make one or two edtech bets. I won't mention which companies.
Mm,
So we can't laugh at others. We made it ourselves.
mm,
Luckily, our businesses are in good shape financially. They have tons of money. There's no ethical issues. Founders have cut costs and are coming back because if you do edtech right, like you see physics wala, there's a lot of
mm,
money to be made in that category. But if
mm,
you do it wrong, like any business, you're not going to go anywhere. So
mm,
they got crazy valuations in that 21, 22 vintages. No, pretty much
mm,
every company got crazy valuations.
mm,
So we have two edtech companies. That's the only two we've done, and they're back. They're moving on the right direction, but we also got sucked in and did edtech at that time. So we can't laugh at anyone else.
mm. Okay. Uh, what do you regret more, saying yes or saying no? Like you said yes to a deal and then you realize it was a bad deal, or you said no and you realize it was a great deal you said no to. Which is a bigger pain for you?
I think it's a very good question. No one asked me this question. Sometimes we have, as human beings, we have FOMO, like, oh God, why did I say no to that one? So earlier it used to be no, but now I've gotten over that. It's life, that's okay. We have to learn from why did I say no to XYZ company, and next time have my antenna up for a similar type of company, similar type of founder, and hopefully say yes versus cribbing. And the yes is where it becomes like, why did I say yes actually? We have no regrets, we make mistakes, we move on. But that's why we want to be methodical, not rush. And when we rush is when we make the mistakes, for sure.
Mm. What are some of those no's that you regret? I mean, not regret, but you wish you hadn't said no.
There's so many. I used to mention them all the time. In some cases, it wasn't even a no. We just move slower, and we're pretty
Okay.
fast moving fund. We're not a slow moving slow book sleeping. We're not private equity, right? But we
Mm,
didn't move fast enough, and they closed. Let's say Ola, for example, and I can go through so many more that we said no to. Mintify just randomly comes to my mind, but I can name maybe 20, 30 unicorns
mm,
if I really put
mm,
my mind to it.
mm,
Uh,
mhm,
the company, I forgot the name. I think it's called Neo or Neo. No, I'm sorry, I don't even remember the name right now, but it's recently changed the name. It's a money
mm.
transfer company. We saw that
Okay.
at a
Yeah,
value.
yeah, Neo. Yeah, 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 yeah.
Neo.
Forex card. Yeah, they have
Yeah,
one.
we saw that at whatever, like for a 10, 15 crore valuation. The founder was amazing, really liked it. We were
Mm,
about to say yes, and some reason we said, all right, but India, Australia was what they were starting with. I remember it was
mm,
2012 or something. And we said, India, Australia, how big can really be? And now it's a $2 billion business. So that
mm,
was a no that we should definitely be regretting because it's foolish.
mm.
No. And there's many such. If I put my mind to it, I could give you 10 more examples.
What do you do when valuations are out of whack? Like, the 2021 period when everything was overvalued. Um,
Yeah, we go
and
as slow as possible and we try to wait for opportunities where some entrepreneurs will somehow come to something realistic where it's not crazy. Now, sometimes, the reality is that even in a crazy hype market, there will be outsized winners. So we have to be very careful saying, okay, you know what, no matter how expensive this one is, for this one, we're willing to pay a little bit more because we believe the founder is just special. So it's okay to overpay and get a little less holding. You can't sit on the sidelines. But try to do as less as possible because there's a moment of time when the market will come down again because we've seen this over 25 years. There's no
mm,
period where it's only down or only up. You just have to hang on in those crazy periods. It's like a hurricane and relax, don't get tempted. Uh, Tell the younger people in the team to just relax because they're not getting paid to do more deals. We
mm,
definitely are not getting paid to do more deals. We're paid to do good deals, high quality
mm,
deals, and return the fund.
mm, mm,
So we have had cycles in our own fund in the years earlier when we were more inexperienced, where we participated in the hype and also did as many deals as everybody else. That didn't turn out too good. So we learned to slow down. We were lucky in those hype cycles that we still got winners, big winners, and therefore it didn't matter eventually. But it could have been a situation where nothing could have been a winner, and then that fund would have been in a particular massive soup.
mm,
So we don't want to be too complacent, especially when we've gotten lucky.
mm. Okay. Yesterday, you were telling me about how you've built up a team and eventually you're stepping back from more and more functions and letting the team manage things. So, uh, you know, what do you look for when you're building a team? Who's a good fit for VC? Like what skills are a good fit for VCs?
Yeah. See, it's not a question of stepping back. It's just doing different roles in the firm,
Hmm.
right? That's how you move. So I'm not stepping back. It's just giving more responsibility to my partners who deserve it, have worked hard and reached a level where they can definitely uh, do a better job than I am. Most definitely, in fact. I use the word most very emphatically. So it makes sense to let them put them in position of strength, what they can do, and to put me in position of my strength, what I can do. What we look for, I think it's a good mix of people. So my favorite has been people if you've already been an entrepreneur, because what happens then is that you have seen the other side of the fence and you have been on the other side asking for the money, working from 0 to 1, 1 to 10, 10 to 100. You have now become more, let's say, you have more empathy because you've seen the hard side. It's super hard entrepreneurship. See, I come from a family of entrepreneurs. We've been building business for 30 years. My father and brother and uncles and everybody. My whole family is only business. So I've been empathetic from day one. But a lot of times, if you're a code junkie, if you're just a investment banker saying aisa karo, life doesn't work like that, right? Even selling one widget is so hard. So for me, those are the favorite. The problem with some of those people are that even if they build billion-dollar businesses, they don't realize that they're now not going to be executing. It's going to be the other entrepreneur. But because they're so used to execution, they feel okay. Yeah, that makes sense. It's easy to go there because he or she can go, but maybe this entrepreneur can't go.
Yeah,
But I'm
right.
giving the wrong person the money,
Hmm.
right?
Hmm. Hmm.
So
Hmm.
it's a mixed bag. But given a
Hmm.
choice, I still prefer entrepreneurs for the reason. And in fact,
Hmm.
entrepreneurs who have not done that well, I prefer in fact even more because they've done well, they've done okay, but not that much. The ego is not too high, but they're competent enough that they started their business, raised outside capital, were risk takers, didn't take jobs. For me, that's the highest respect that they've done that and
Hmm.
now they want to move to venture or whatever. So I like such people.
Hmm.
Or you go to someone who's already been a VC for many years, so they already have a track record. So there's nothing to ask. Either I like the record or I don't like the record. You
Hmm.
say this person has been executing, making good investments. They just want to change the platform. So we're happy to welcome such people. So those are the
Hmm.
two we like. On the other hand, there's nothing wrong with it being a McKinsey consultant and being a VC. We haven't really hired anyone with that background. But because they have first principles thinking, they're very logical, and they can help many in many different ways. So there's different strokes, man. Who knows what's right and wrong? We're still working on it.
Okay. I love how much humility you have. Everything that you say, you also tell me that this could be complete bullshit. So I really
Yeah.
enjoy that. Uh, what about at the analyst level? So there also you're looking at some entrepreneurial experience, or are you looking at like
No, no.
number
Analyst, I just
crunching
want
and?
hungry and people who are hungry, who
Hmm.
have first principles thinking, who really are willing to hustle like anything and really enjoy the job. So we are lucky to have some great analysts and associates in our firm.
Hmm.
Good people, first of all, which is very important for us. Very hardworking, very committed. Last night we were at the event and I was asking some of them, so what's your plan now? They're going to the airport, some of them. So where are you going now at 9:30? They said, no, 11:30 flight back to Bangalore, back to work.
Oh
So
wow.
some of them stayed back with their other work in Bombay.
Hmm.
My point is, this whole generation is just special. And I can guarantee you that even the 25-year analyst is much, much smarter than me in deciding what to do. It's just that because he or she is 25, we are deciding for them. But actually,
Hmm.
if I had got out of the way, Kay will probably do better with just the 25-year-old. With what we have to understand that venture is a young man's business, or young woman's business, in fact. And if we can just control our egos and step away and let these people redo their thing, magic happens.
Why did you say young woman specifically? What is the advantage that a
Yeah,
young
because
woman has?
there's no advantage of women or men. That's why I'm
Okay.
mentioning
Ah,
both, right?
okay.
Because somehow, as human beings, we tend to say men, and I'm like, no, it's
No,
equal.
no, I agree with you. Yep, yep, yep.
We when we hire, we don't look for women or men. We just look for
Hmm.
good people. If the
Hmm.
person's right attitude, right profile, we're happy to take him on. We ended up with many more women than we expected, but we're quite glad with that, and we want more. So they're
Hmm.
very
Hmm.
hardworking,
Hmm.
very committed, very and no bullshit. They don't take bullshit, which is great.
Hmm. So, when you're bringing on entrepreneurs as partners, uh, most entrepreneurs suffer from an excess of optimism, right? And that's the only reason why one would become an entrepreneur, because you suffer from that excess of optimism. Doesn't that work against you as a VC? I think VCs need to be pessimistic.
Yeah, so if I'm being an entrepreneur, I'm also optimistic. That's why I don't
Mm.
decide any of the investments my partners decide, because I'm
Ah,
optimistic and I'm
okay.
always looking at the good thing in the company. But my partners are more practical, pragmatic, sensible, and they're the ones who veer me away from most of the deals.
Okay, okay, interesting. Okay, so let's talk a little bit about your family background. And uh, the Mirchandani name, of course, is very familiar to me at my generation, but I don't know how many in the current generation would be that aware of what, like, your father has built up. Can you just tell me that whole story? In a way, I think he was like a OG startup founder of India. So just
Yeah, he's
take me through
definitely
that journey. Yeah.
OG startup founder because um, incredible journey. When he graduated from BITS Pilani, only three people who graduated from that class stayed back in India. Everyone else, because they were the smartest of smart, they all
Yeah.
went to the US. All. So one of his colleagues went to, I think, the startup group. One went to the Birla group, and he became an entrepreneur on day one. Where he partnered with a very
And which
large
year is
conglomerate.
this?
Must have been in the late 60s. Yeah,
Okay.
no,
Hmm.
early 70s or something. No,
Hmm.
late 60s. Because I was born
Hmm.
in 72, so it must have been 60s. So you can imagine Pilani in those days, it was really in the middle of nowhere, right?
Hmm.
And these very, very smart, very, very hardworking, all of them moved in the 60s to the US. And that's when the big emigration happened to the US. Visas were much easier. And he partnered with a very large conglomerate where they were starting a new company and they actually gave him equity, unheard of. And that was his first business. And one day he just came home and said, I want to exit
And
we own some.
what was the business about? Like, what was the
It was a
product?
packaging business. The packaging
Okay.
business.
Okay.
So he was selling these packages to pharmaceutical companies. Very
Hmm.
successful business. But one day he decided that this can't become very large. And I keep telling entrepreneurs to what you said about the TAM. So he said, look, what can be a new business that the it's a small town now but growing fast, exactly what I said earlier. So he looked at many ideas. They even launched, him and his brother, and then eventually my uncle, my dad's brother-in-law, they joined forces, and they looked at many ideas. They even launched watches, and so on and so forth. I think they even did some shoe business, very small shoe business, didn't scale. So you got to fail fast, is what I keep telling founders. That's what their success is, and take a risk. They were willing to leave such a amazing opportunity where you get equity because he realized that the TAM is not going to expand in that business that he was doing, and his aspirations were much bigger. And you're so far before his time because now people understand this. In those days, to build a
Hmm.
50 crore company was amazing.
Yeah.
And they came up with the idea that TVs are going to take off in India with Asian Games. And that's when they got the license and went and got JVC and got into capital. But he didn't have any access to capital. So they had to sell whatever small assets we have, including the home we lived in, to use that money to start the
Oh
company.
wow. Okay.
So that's one of the reasons why I nudged him into getting into early stage venture to help entrepreneurs was like him, who were come from nowhere, middle
Hmm.
class background. Where will he get capital? And you can imagine in 1980 or 81 there was no venture capital industry. There was nothing even in 2000. And so he raised this small capital, and from there it's been an incredible journey. And
So
I
they
remember
launched Onida. Like, Merck
the
is the
Onida.
company name, and
Yeah, that's right. They
hmm,
make TVs, Onida TVs, and now
hmm.
it's of course, 550 odd TV manufacturers got a license in 1981 to make color TVs. So the people who are your parents'
This was when
generation,
the switch was happening from black and white to color.
that's right. Asian Games was the big
Okay.
thing,
Ah.
inflection point. So it
Hmm.
was a small market, and then it just took off. And Onida
Okay.
became one of the most valuable businesses in India for decades, like all across the 80s, 90s, 2000s. Where we are today is that out of that 551 TV manufacturers that were licensed in 1981, 550 have shut down. I won't mention any names, it's not fair. All of
Hmm.
them were awesome entrepreneurs, they all tried. The only one which is still listed and going strong is Merck Electronics, Onida, where my dad is the founder. He's 82 years old. Great story of
Wow.
determination and hard
Hmm.
work, and just incredible. So the customer profile has changed from, let's say, person XYZ who was buying it to now person Y. But the business still remains solvent, it's still there. There's some very interesting plans my brother, who's now running it, has. And I think I'm quite confident that if those plans fructify, it'll become substantially more valuable in the next couple of years because electronics. Let's take now they're in ACs, washing machines, and televisions.
Hmm.
And you can imagine that AC, you and me have AC, I'm sure, in our homes, but people want. It's only 5% of Indians have air conditioners. So we can project that one day our chauffeurs, maids, helpers will all have air conditioners in the market of 1 billion people. So over the next 20 years, just making ACs itself is such a humongous opportunity, let alone washing machines. People are going to work nowadays, don't have time, no one can afford maids, maids don't want to work for you. What are you going to do? So you use the washing machine. Microwave ovens, double income, heat the food. And there's so many more products that my brother has in mind along with his team. So actually, I'm very excited about the future of that company. And again, a great story of amazing perseverance and determination by my father to have kept the business solvent till today.
When did Onida go public? Like Merck, when did Merck go public?
1994.
There definitely is like a little bit of a lost opportunity, right? Like how big the consumer electronic market is. Uh, like the market has grown much bigger than what Merck grew at.
Yeah, I tell you
What
the
what was
issue.
the missed opportunity?
It wasn't a missed opportunity. I think the issue was with our country's financial situation. So in 1991, Manmohan Singh, our obviously amazing prime minister. That time he was finance minister. He called my father to Delhi and said, "My father's name is Guru. He said, Guru, please come and meet me." So he went and said, "Sir, what do you want to discuss?" He said, "Look, India is collapsed. We have no money. Right? We all know what happened in '91." So he said, "I have no choice but to open the doors and allow multinationals to come from next month." Now, if you go into the history of electronics across the world, markets like China, Korea, Europe, the US, Japan, they close the markets, let these companies scale to a very, very large scale, multiple billions of dollars, if not tens of billions of dollars. Like that's why you see electronics even today is dominated by that particular area, that particular country. So in Japan,
Hmm,
you'll see a Toshiba or a Hitachi or a JVC, not JVC is now gone, but Sony are dominant. In China, you
hmm,
got the Chinese brands. In Europe, you got the Europeans, Philips, etc. And India was the only country where Onida's turnover was only 150 crores at that time. We're not even a $20 million company. So we
hmm,
had nowhere near reached even billion, let alone billions. So we were
hmm,
too small when the market opened. And you
hmm,
already become very large in your home country. Let's say Korea, LG, Samsung was 10 billion each by then. So you can
hmm,
now throw money to grow your business in India because you're saying it's a long time market. And look at LG is going public now, but they've been throwing money in India for 20 years because their balance sheet is so strong. It's like me trying to go
hmm,
into some small African country and
hmm,
eventually it becomes a very large market. So how do you compete 150 and no access to capital? On
hmm,
top of that, the guy comes in. So that was a lost opportunity that if India was a little bit more strong as a country, they would have probably kept the gate closed for Indian entrepreneurs. Not trying to say we can't compete. Get us to scale, then open the door.
hmm, hmm,
So considering that, the fact that someone's buying 800 crores of ACs or washing machines being bought today by Onida, it's a miracle.
hmm, hmm, hmm. What's your take on Trump tariffs then? Like, essentially, Trump wants India to open up its market. Is that something you're in favor of? Like more
I
free
am
trade, or
it's above my pay grade to talk about politics, but Modi has to do what he has to do. He has to appease not people like me, but appease the grassroots and the farming situation where it's untenable for him to let livestock come or whatever food stuff come because the farmers are just not going to tolerate it, and there's hundreds of millions of them in a country as everyone knows, and that political heat is just too high. So for him, it was just a red line. And as you saw in today's papers, there's already some thaw happening. So hopefully, better sense prevails. And President Trump is after all a businessman, and Modi is, genius. So I'm sure they'll
Hmm,
figure it out
hmm,
because it's not fair to our exporters. They've all been stuck. And I've had many friends who built fabulous businesses. We have many portfolio companies that have built amazing companies, and at 50%, and let's be realistic, it's not a joke. It's easy
hmm,
to say go to
hmm.
Europe, go to Timbuktu,
Yeah, yeah,
but
yeah,
why don't you
absolutely.
come and
Yeah.
try, do this?
Hmm, hmm,
Just do. You can't switch on a dime. It's not a joke.
hmm, hmm,
So
hmm.
think my prediction, and it's foolish to be predicting some of this stuff where it's way above my pay grade. Is it should calm down in the next couple of weeks.
Okay. Um, so, did you join Merck once you finished your education, or like what was your path?
Yeah, so I was the eldest son in my family business. So it was taken for obvious that I joined. Because those days in the 90s, it was like there was nothing else you can do. So I joined, and I thought maybe in 6 months I'll be a director in the company because I was the oldest son. But
Okay.
I became a director of Merck Electronics just 3 months back. I
Oh
mean, you can
wow.
do the maths. That was 1996, and now it's 2025, right? So literally, I became last quarter. And my dad had a different plan for me. He said, "Dude, no way you're going to come and be a director and let alone MD and run this." At that time, we were at our peak. He said, "I want you to really go deep." I didn't understand what he meant, but then I realized later a simple thing like I lived outside India for many years. He said, "Now from
You were
tomorrow onwards,
studying
no."
abroad.
Yeah, he's studying abroad. I was in boarding school. So many years had
Okay.
passed.
Hmm.
So he said, "Okay, you must take the train and go home from now on." And I'm like, "What train?" So we went to the station. And I couldn't believe it because it was like a medieval world, because I'd been living abroad for so many years and people like on top of each other. And I'm like, "Dude, this is sounding insane. Like, I mean, it's looking insane." And my brother had lived in India, so he just jumped onto the train. And because I didn't jump in, he jumped back out. And he said, "Dude." So we went back by taxi. There was no Sea Link in those days. Took me 2 hours to go home. Next day, my brother said, "Dude, this bloody," he told my dad, "Dad, this bloody brother of mine, you better tell him to either come or I'm going, I'm not coming back." So my dad said, "Dude, you better fix this." So I remember life, one thing my parents taught me is always jump in. The train was going against traffic, but it was still super full. It started getting emptier and emptier by the time we reached Churchgate. But what my brother didn't tell me purposely was in Churchgate, a million people run in. So you got to stand on the side, or you get crushed. So I'm standing right in the front trying to jump out, and suddenly hundreds of people running towards me, and I'll never forget getting dragged at the back and my back getting smashed. So when I
Uh,
left the train that day, I was like, "Geez, this is something else." But one thing I did was I said, "I won't give up. I'll keep going." A week later, it was like nothing for me. And my dad said, "You can't go first class, you have to go second class." So I remember going for 6 years in a row, second class between, it was Churchgate, not Churchgate station. Churchgate, sometimes I get off, sometimes I get off at Grant Road, but Andheri East was the station we take. Until today, if I have to take a train, no problem. So then what he did was he made me like just a lowly sales manager in Bombay branch. Then I remember going to Mangalore and literally staying there for 2 years, not for 2 weeks, as the Mangalore branch manager. I'd never even seen lights go off more than 10 seconds because my apartment where we lived in Bombay, where we still live, is in Malabar Hills, right next to the Chief Minister's house. So, unlike anywhere in India, we'd never seen power outages. Well, 99% of India, it's normal, right? So, we're living on
yeah.
a different planet. Here you go, every 30 seconds the light goes off. I'm like, "Dude, where am I coming? What the hell is going on?" But you get used to it, right? You figure it out. I would travel in those buses where today my chauffeur travels and so on and so forth. So I've seen l- real life as to how people like that survive going 6 hours in the forest. I've lived in one-star hotels, and that continued for years. Ran Bombay branch when I came back. So that was my Onida experience, and then I finally left in 2002.
And
That
why
was
did you
another
leave?
radical decision. So again, because of my personality, because I just felt that I want to do my own thing, and I want no one to decide for me. Now, there's no way I can do that in Rita because my father is the dominant chairman of the company. My uncle is the dominant vice chairman. There was a CEO, and there's another uncle in Delhi, all very accomplished. So I said, if it's going to be four people, and then me as the fifth wheel, and then my brother will come, my cousins will come, and never end, like most family businesses. Now, some families know how to divide this out or grow new businesses, but at least for me, it was not fitting. So we actually we got into the call center business, and I was the founder and CEO of the business. And that's when I went deep into like being an entrepreneur myself, and we built that out over the next 5 or 6 years.
Like an international, serving international
Yeah,
clients.
that
Okay.
irritating where we call you and torture you and sell you credit cards and all. So we was one of the first tenants of Mindspace in Malad. So it was like 16-hour days because I would literally, when I got married, I actually, my wife thought I'm having an affair because I had to move to Malad because I had no choice because the commute was just too long. You finish at 4 a.m., you drive home, which used to take
Yeah,
more than
because
1.5 hours,
US shift
even
timings and all that.
correct. And then by 9 o'clock, my finance department would come, so I had to go back to work, Indian time and US time.
Hmm. Hmm.
So, it was 16 hours. I think more than even entrepreneurs do now, we used to do in those
Hmm.
days.
Hmm.
But it was great, great experience for me. It's the best experience of my life.
And did you sell that or like?
Hmm. We exited that. We sold it to a Canadian company. We didn't
Okay.
make too much money there, but it was an exit. And the
Hmm.
learnings were priceless.
Hmm.
See, what happened, we started with voice. But by the time we realized the voice, we need scale, we need 10,000 seats. So we managed to pivot that into a healthcare BPO. That's why we got a little bit more
Okay.
value for that. And that's how
Hmm.
we managed to exit.
Okay. Okay. When did you start investing?
So that's another story by itself. So around 2000, 2001, I attended a talk by a very prominent Indian businessman at a YPO conversation where I'm a member. And he had talked about how he had moved from going from textiles to pharmaceuticals. And the reason was just a more lucrative industry where you get better multiples and more value is created. And Onida was at its peak. We were 2,000 crores. We were really at the peak. But because I was in sales, I realized that, hey man, this industry really sucks. Margins are low. It's hard to even sell one TV, even if you're number one market share, etc., etc. So I was thinking, what else can I do? Parallelly, as I said earlier in the podcast, my dad being an entrepreneur, I was like, it's so hard even for now for entrepreneurs. I'm Gulu Mirchandani's son, so I have access to capital. But am I the best person to really be allocating the capital for myself or giving it to someone smarter than me? And hopefully, my mom taught me to be humble. I realized the whole damn world is smarter than me. So why can't I help? So I told my dad that why can't we support entrepreneurs like yourself? And let's get into a new category. So I started doing a lot of research, reading magazines like Forbes to understand what is the new trends, meeting a prominent industrialist, Mr. Mahindra is a good friend of my dad's. I met him. He guided me saying, hey, why don't you do higher end IT? Because already IT had taken off with Infosys, Tech Mahindra, Wipro, etc. And so I said, okay. So there was a young colleague of mine in Onida, his name was Kiran. And I said, Kiran, if you have any great smart friends who are interested in capital, let me know. So he was surprised because nobody's giving money. So every
Yeah,
once
yeah.
in a while
There
he'll
was
make me
no
meet.
concept of
Yeah.
VC in India at that time. Yeah.
So I remember one team came to meet me. They came for something else, like comparing televisions, and they said, "Can you give us your TVs?" So I said, "But tell me a little bit about the business." And at the end of it, I said, "Looks very interesting. If you're interested, I could do more diligence, of course, but I may be interested in investing." And they couldn't believe it. And then
Yeah.
one thing led
Right.
to the other, and we actually ended up investing in that company, which eventually pivoted to becoming a data mining business. And that company became my first investment, which
Hmm.
today is a company called Fractal Analytics. 25 years later.
Ah. Okay. Yeah. Unicorn. Right. Hmm.
Yeah, that's right. And we should do
Hmm.
an IPO later this year. But that's a
Hmm.
25-year journey. Also, so
Wow.
the idea was how do we marry helping entrepreneurs like my father, and
Hmm.
how can I get out of electronics and go into tech?
Hmm.
So today, if I see my family holdings, 98% of our holdings are in tech, even though we are still large shareholders in Onida. But
Hmm.
90% of our net worth holdings, everything is tech. That happened because
Hmm.
of one small talk that changed
Hmm.
my life.
So, what were some of the early lessons you learned? Like, what did you learn from the fractal experience, or those memorable investments which you would have done early on?
Well, one is pivot. It's all about great teams. Fractal was actually Woodle.com, comparison website, as I said. But to the credit of the founders, they realized that that business is going nowhere, and they pivoted to what they were really good at, which is data and finance, and that's how the original avatar was data mining, which now today, of course, is AI. Or let's say, in Mobi's case, we were a mobile search company. But again, the best founders like Naveen and
Yeah, they were
Amir
called
and
M Coach.
M Coach, that's what we funded. That was the first investment we made uh, from Mumbai Angels, which I was co-founder. And there again, within 3 months, I remember Naveen calling us and saying, Sasha, in nature, right? Let's meet up. And I was like, no, if you really believe it's not working, you tell me what you want to do next and we'll support you. And he did four such pivots till it reached mobile ads. That's what we can change the brand to InMobi. So really good founders know how to move and really understand the market and hold on and say, okay, let's change this. Uh, and what else can we do here? And that's what they both did. And there's so many more examples I can go through. So many.
I guess that's where you learnt about the irrelevance of the TAM number, because both
Yeah,
these did not have a TAM as such, right? Like,
correct. See, a good founder like my father, he
hmm,
started with the packaging business. We realized that there is no time here. Whichever angle it
hmm,
takes, roads are all closed. So then
right.
you get out of it, no? So I
Hmm,
remember a young entrepreneur came to meet my uncle in 1990 something, don't quote me on
hmm,
the years. And I was just sitting in the corner in the meeting. And he was talking about how he wants to get into mobile, wireless mobile. And he already had a business of making push button phones. So we asked him, so why what's up with the push buttons doing really well? What's your problem? He said, look, at best, at peak, it'll be a 500 crore company, which at that time sounded astronomical. 500 crores looked like a big number. We were like, you're
hmm.
not happy with that? He said, no, no, I don't want 500. I want to build something huge. And so foolishly, we didn't partner with him. We decided to
Hmm,
partner with ourselves. and we didn't get the license for Bombay for the mobile license, and that entrepreneur was Sunil Mittal and created EdTech.
Oh wow.
So
Oh
my
wow.
point is, Sunil
Hmm.
could have been very happy as chairman and CEO of B Next or whatever the phones were called, right? BTEL.
Yeah.
But that's
Yeah.
irrelevant today.
Yeah. Yeah.
500
Beetle.
crore
Yeah.
means
Yeah.
what?
Yeah.
Yeah. Today, where is
Yeah.
he? Yeah, he's the king of our country. He's
Yeah.
number two provider, unbelievable entrepreneur. What a great story. One of the
Hmm.
top five entrepreneurs in the history of
Absolutely.
our country. But if he had not taken that
Absolutely.
stance, same thing with my dad, right? If he
Hmm.
had just been stuck in some small packaging business, where would he be
Hmm.
today?
While you did tell me that the opening up of the market was one of the reasons why the missed opportunity for Onida, but then, like, say a Bajaj would have also faced the same thing, right? Like Japanese brands coming in, etc., etc. Um, so, were there other reasons also that for that missed opportunity of Onida?
But if you see, again, I don't want to pick on any one company because I'm a huge fan of Bajaj. Mr. Rahul
Hmm.
Bajaj, of course, was a legend. His sons are unbelievable.
Hmm.
They're no nonsense people, and they've done beyond phenomenally, right? And
Hmm.
ethically. So, if you
Hmm.
ask me, one of the which is one of the top families in our country, which has really progressed, it's the Bajaj family, and you can see
Right.
across all their businesses. So, I
Yes.
think anyone
Absolutely.
knocking them would be mad,
Extremely well
and
run. Yes.
the big man who passed away was such a legend. He spoke his mind in a country like India. So I can't have more regard for that family. And they continue to execute and will continue going forward. Treating people with respect. Everything was amazing about them.
Hmm.
So the difference is scooter, if you think about scooter business, which is their main business, there's not that much global competition if you really think about it. You tell me five large 50, $10 billion scooter companies. But I can
Hmm.
name you $20 billion companies in those days of electronics,
Hmm.
which are now
Hmm. Hmm.
$100 billion companies. So there's a
Hmm.
huge difference. And
Hmm.
Bajaj already reached a certain scale.
Hmm.
We were only
Hmm. Hmm.
150 crores. The industry had come much later. Scooters were 60s people are driving scooters, right? So
Yeah,
that's my
right,
point.
right.
Our timing
Okay.
sucked. If it had been, let's say, 1,000 crore company by then, or
Hmm.
some size, yeah, at least get it to some
Hmm.
size and then open the market.
Hmm.
It
Hmm.
would have
Hmm.
been
Hmm.
so Bajaj already reached that size by then.
Hmm.
On top
Hmm.
of obviously being very competent people. So it wasn't an
Hmm.
apples to apples comparison. Again, my
Hmm.
dad never cribbed, but it is
Hmm.
reality. I mean, see, in life, what are you going to crib? Because who's going to listen to you in life? What cribbers are just wasting their time because no one gives a shit, man. Nobody's going to
Yeah,
cry about your
true.
cribbing. So
Yeah, yeah,
today,
yeah.
we anyway moved to tech, and our net worth has gone up because of tech. So we moved
Hmm.
on, but we're
Hmm.
not given
Hmm.
up on
Hmm. Hmm.
electronics, and
Right.
we will come back.
Hmm. Hmm. Okay, fascinating. So let me end with asking you, what's your advice to founders who may want to pitch to you? I feel like a lot of people might discover this episode when they're raising funds and they want to pitch to K. So, would you like to share any advice to them?
No, I say come through a respectable reference because that's how we you come right on top of our schedules right off the bat. Um, Well, the rest is all standard stuff. So a good entrepreneur knows what they have to do when they pitch to us. We don't need to lecture them as to what to do. We've seen that time and again. And don't talk about crazy TAMs and say 1% of this market. Keep the
Hmm.
presentation very simple.
Hmm.
There's too much clutter in most of these decks. Nobody has time. Like we see, like I
Hmm.
said, just today, Thursday morning, there must be 25 emails in my desk just on pitches. Now, I
Hmm.
don't have time to go through each of them in detail. So, if you
Hmm.
keep it very simple, 10 pages, what is the problem? One line. What is the solution? One line. Team. We don't need any jargon. We don't need any goddamn pictures. Maybe a little demo and a little bit about why you're different. A little bit early traction if you have it with a clear graph. Just
Hmm.
dumb it down. Keep it simple.
Hmm.
So you go after one use case. People go after 10 different things. You'll have a B2B angle, you'll have a B2C angle, and all this is in the first 2 months of the business existence. So we know
Hmm.
that we look for founders who have clarity of mind, clarity, they have clear clarity, they know exactly where they're going.
Hmm.
And you can tell in a single meeting in the first 10 minutes. And
Hmm.
I'm fully clued into that conversation.
Hmm.
So that's what it is. Just relax. And eventually, when you raise 100 million, 500 million, you'll have spreadsheets that are going up the wazoo, which rightfully so the person's going to ask for. You'll have
Hmm.
data, slides,
Hmm.
fancy people making it for you. But for the early days, dumb it down.
I feel like maybe the problem framing is something which a lot of founders struggle with, like how to
Damn hard.
frame that.
You just can't frame
What's
it.
the problem?
Very hard. Because you have
So,
to, that's very important. It shows the power of the entrepreneur's clarity of mind. When
hmm,
the problem and solution is one line. When I try to
hmm,
get simple founders and say, okay, make the problem one line, it's
hmm,
amazing how hard it is for them, for many of them. They
But
just really struggle.
can you give some advice or some examples on like good problem framing?
There's a million. You have to go to the internet and check here. That's why I keep telling people. There's so many examples,
Yeah.
right? Including from our own portfolio. They are so simple, right? When Facebook to the world raised capital, LinkedIn to the world raised capital, and I can go through Indian examples also. It's very simple.
What was
Like,
Foxtail's problem? Were you personally involved in Foxtail? Like, what was their problem statement, or how did they frame the problem?
no, my partners Gaurav and Sunita were involved. I was just
Okay.
notified that this deal is happening.
Awesome. Thank you so much for your time, Sasha. It was a real pleasure.
Most welcome, and we'll be in touch, Akshay.
Yeah.
Thank you.